Hi, this is Peter Schiff for the Schiff Gold Friday market wrap. And it was one hell of a week that I'm going to wrap up today. We had a lot of volatility. I think it was a very significant week as far as risk on and risk off is concerned. I think really we're seeing a significant de-risking of the markets and a deleveraging. And the most significant action really happened yesterday on Thursday. And the catalyst for the move was the Nvidia earnings. Now, Nvidia has been really the poster stock for the AI trade and everything that is leading the markets, the NASDAQ higher. It's the stock that just everybody loves, everybody owns, and it is the primary beneficiary of all the hyperscalers spending money, building out their data centers and buying the GPUs from Nvidia. And of course, once again, Nvidia beat the numbers, right? And when the beat came out, and of course, expectations were high. It was a high bar, but Nvidia still managed to surmount that high bar. And the initial reaction was that Nvidia was up 4 or 5% in the aftermarket on Wednesday. And so the whole NASDAQ was following the lead. Bitcoin and other crypto-related stocks, which had been beaten up very badly going into Wednesday, they had a dead cat bounce on Wednesday night following the lead of Nvidia. And then when the U.S. markets opened on Thursday, they gapped up, and much of the earlier gains or overnight gains were still there. But then relatively shortly thereafter, I forget how much time the market spent up, maybe an hour or so, we had a huge reversal. Nvidia ended up negative on the day by a couple of percent. But other tech stocks just got obliterated. Everything related to AI and nuclear power, we saw huge drops. And of course, the crypto market got obliterated. All of the stocks that are related to crypto, whether it's these crypto Bitcoin treasury companies or Ethereum treasury companies, or exchanges or things that that trade Bitcoin or stable coins or crypto in general, just got clobbered on Thursday. And I think it was a very significant reversal. Gold held up pretty well, as did silver, although both gold and silver got hit hard overnight, although they paired those losses. Gold was down back below, or not quite. Gold didn't get below 4,000. In fact, it never did. It was down about 40 to 50 bucks, but it was always above 4,000. And in fact, it closed the day down about $14 at about 4,062. So holding like a champ at the $4,000 level, still off a bit on the week. But given this mass liquidation, which I think looks like it was liquidity driven, I think people are getting some margin calls. I think there's some forced selling. And that may have been why the gold stocks got hit so hard yesterday. Even though gold was not down very much, maybe less than 20 bucks, gold stocks were down 4% or so. In fact, that's how much they were down on the week about. The GDXJ were off about 4%. Pretty much all those losses being clocked yesterday. In fact, we made up some of those losses today. So actually it was a bigger drop, or there were some losses earlier in the week. Silver was down over $1.50 in the early morning hours, got below the $50 level, came back up to about $50 late in the day. In fact, it did trade back above 50 intraday, but it looks like it's settled just below 50. I mean, I'm not sure the exact settlement yet because I'm recording this this pretty soon after the close, so I'm not sure where the settle is. But right now I'm looking at about a dime below 50, 49.90. But again, holding near $50, that's the breakout level. That's the old double top. So gold and silver holding up very well in the face of all of this market volatility. Part of it, though, is coming out of Japan. Part of the liquidity squeeze, the yen carry trade, the new Japanese government announced a massive new fiscal stimulus where they're going to be mailing out stimulus checks and doing some other stuff, right? And, these stimulus plans are all misguided. They've been making lots of mistakes in Japan, just like we make mistakes here. Although the Japanese stock market has been doing great, although all the other stock markets got clobbered last night as a result of this and what's been happening to Japanese government bonds. In fact, the 10-year JGB, the yield got above 1.8% yesterday. It backed off a bit today. I think we settled at about 1.77. But 1.8 was like a 20-year high. I forget exactly. But I've been talking on my main podcast at, the Peter Schiff, not on so much on the Schiff Gold, although I probably mentioned it. But I've talked a lot about the yen carry trade and the blow up of the Japanese government bond market. And that's what's going on. Because when this started, the yield on 10-year Japanese government bonds was less than 50 basis points. And I remember when, they had a line in the sand there, they were trying to hold the yields below 50 basis points. In fact, they were quite a bit below at one point. And now they're more than triple that. I think once we get above 2% in the 10-year Japanese government bonds, you're going to see, some real fireworks in the markets, not just in Japan, but all around the world. But it was interesting because the government came out and said that even though they're doing this massive stimulus, they don't anticipate increasing the issuance of, Japanese government bonds. Well, how can that be, right? How are they going to run bigger deficits and not have to issue more bonds to finance them? And what I'm thinking could be the situation, and I don't know because the Japanese have been a bit reluctant to do this, but it's the smart move. Maybe instead of selling Japanese government bonds, issuing new ones, they'll just sell some U.S. Treasuries because they've got over $1 trillion, right, losing value. The best way the Japanese can stimulate their economy is by selling Treasuries, not JGBs. See, if they run bigger deficits, that's going to spook the bond market even more. That's going to weaken the yen. That's going to push up import prices. It's bad news. And that the yen is already weak, near 160 against the dollar. They can solve their problems by selling Treasuries and then selling the dollars they get when they sell Treasuries to buy yen. And then they can send out that yen to Japanese citizens. And that's great because that'll strengthen the yen, which will give the Japanese more purchasing power, which will help bring down their import prices. And so that's the best way to stimulate the economy without hurting the economy. Because if they stimulate it by selling more Japanese government bonds, then you're going to weaken the yen. You're going to have more inflation. You're going to have more upward pressure on yields. So selling Treasuries is great for Japan, but it's going to torpedo the U.S. economy and the U.S. financial markets because selling Treasuries pushes up our yields, right? And it pushes down the dollar. And it also causes an unraveling, more so, of the yen carry trade, where people who borrowed yen to buy risk assets in the U.S. or even Treasuries now have to reverse those trades, sell out their risk assets to buy back their yen. So some of that pressure may already be what was coming down on the U.S. tech stocks, and we'll see what happens next week as we continue and build on what happened this week, which again was a very significant week in the markets. But one of the reasons I think it was very significant for gold too is the blow up of Bitcoin, right? And because Bitcoin has been overshadowing gold for years, right? It's been stealing all the headlines, stealing all of gold's thunder. And I know it's been very frustrating to the gold bugs to just watch all the crypto bugs getting rich while, gold was going sideways. And in fact, it was, the years of sideways action. Gold peaked out from its big run from sub 300 in 1999 to 1900 in 2011. from 2011 to 2014, gold really didn't go anywhere because it didn't get above 2000 until 2014. And that was about the peak from 2011. So it was during, that dozen-year time period where gold holders were frustrated by the failure of gold to make any, new gains, that Bitcoin was able to really steal the show by convincing a lot of people that it was the new gold. After all, look at this spectacular appreciation. Bitcoin keeps going up. Gold doesn't go anywhere, right? So Bitcoin is taking gold's place. It's better than gold. It's gold 2.0. And the markets kept, reinforcing this up until this year, right? This year, gold is up better than 50%. And I don't know, Bitcoin is down over 5% or something like that. Bitcoin is 85,000 as I'm talking. When I recorded the podcast last week, it was still over 100,000. Bitcoin dropped 10% on the week, or maybe it was, just below. The low today was under 82 before we got a rally back. No, except below 81. Bitcoin earlier this morning got to 80,537. That's on Bitstamp. We were at 126 not too long ago, like a month or something. So you're talking about a 35% decline in Bitcoin in dollars. Against gold, it's 43%. This is a massive bear market. But Bitcoin is far more correlated with tech stocks than gold. And if tech stocks have peaked, if we're going to have a pullback, a correction that's just getting started in tech stocks, the bear market that is already well underway in crypto is going to get a whole lot worse. In fact, it was crypto that broke first. Crypto was a leading indicator of what was going to happen in other risk assets, because Bitcoin is the riskiest asset of them all, and all this crypto, right? Because it's all nothing. It's just all pure hype. And in fact, I mentioned this, and I've been pointing the weakness of the crypto-related stocks, which have been obliterated. MicroStrategy is down 70% now. It was down, I think, 15% this week, but it's down 70% from its high a year ago in November of 2024. Following the election of Trump, it had a big spike, but it's now down 70%. But all of these crypto stocks are getting decimated. In fact, the worst one that I've seen is Nakamoto, symbol is NAKA. This is a Bitcoin Treasury company that was launched this year in May. And it was launched while I was at the Bitcoin conference in May, 35,000 people. And one of the hot topics was buying into Nakamoto, because the guys that run that conference are the ones that were behind Nakamoto. And of course, it's Nakamoto after Satoshi Nakamoto, right? And it's a Bitcoin Treasury company, which means it's nothing, right? There is no viable business model for Bitcoin Treasury companies. All they do is buy Bitcoin and hold it. I mean, what kind of business is that, right? Anybody could buy Bitcoin. I don't have to invest in a company to buy my Bitcoin. If I want Bitcoin, I could just buy it. I mean, it's all a bunch of nonsense. But this stock came out and it was over $30 a share. $30 a share in May at the conference. It closed today at 44 cents. I mean, basically it's a zero. If you put your money into this company, you basically lost it all. And it's not even, a year, like half a year. You've lost everything, right? I mean, sure, if you got 44 cents left out of $30, I mean, that's nothing, right? And obviously this is, I think, the worst example I know of, but more are going to follow. I think all these companies are going to go out of business. And I think MicroStrategy is going to be trading at a discount to its Bitcoin any day. And that's going to put MicroStrategy out of the Bitcoin buying business. It won't be able to buy it anymore because it won't be able to sell stock and generate a positive Bitcoin yield. And the word yield, is kind of deceptive. It's not really a yield, but he was able to increase the Bitcoin per share when he could sell his stock at a premium and then go in and buy to the market and buy Bitcoin, which helped prop up the price. It was all this buying by Michael Saylor. In fact, last week, he spent over $1 billion, almost $1 billion rather, buying Bitcoin, and his average price was $102,000 a share. It's not even a week later. Last week, he blew almost $1 billion at 102, and it's at 85. Now, God knows how much Bitcoin he bought this week. We'll find out on Monday when he posts on X how much more Bitcoin MicroStrategy bought. But his average price now is probably about $75,000. Bitcoin is $85,000. He's barely up. I mean, he's got a minimal return. He's been buying Bitcoin for 5 years, and he's got about a $10 or a $10,000 profit on his cost basis. He's up like 13%. I mean, if he'd have bought anything else, he'd be better off. I mean, imagine if he had bought gold. Imagine if every time MicroStrategy went into the market and bought Bitcoin, they bought gold instead. I mean, they'd be way ahead. He'd be much better off. And of course, had he bought gold, and if he wanted to sell it, well, he could get out. He could actually realize the profit. But there's no way MicroStrategy can realize that small 13% profit in Bitcoin because they would crash the market. He's trapped. But the significance of this is that the Bitcoin trade is over. And, you know, if it was gold's failure to perform that was the impetus for Bitcoin, here you have 2025 where Bitcoin is down, right? And who knows how much lower it's going to be by the end of the year. But Bitcoin is getting killed, and gold is having like its best year since the 1970s. So I think a lot of the people that threw in the towel on gold over the last couple of years to buy Bitcoin, they're realizing they made a big mistake, and now they're going to go back to gold. And in fact, all these Bitcoin guys keep saying, zoom out, look at the last 5 or 10 years. They're irrelevant because most people who own Bitcoin today didn't own it 10 years ago. Those returns are irrelevant to their actual experience. You know, it's a song, right? What have you done for me lately? Well, if people are asking, what has Bitcoin done for me lately? Hadn't done anything but lose the money. Meanwhile, they missed out on a huge gain in gold by buying Bitcoin instead. And so I think in 2026, you're going to see a lot of people that are going to be trying to rotate out of crypto into gold. Of course, there's not going to be much to rotate out of because the market's going to implode. So most of the money is just going to disappear, right? It went into the pockets of the people who sold the Bitcoin. They've been selling Bitcoin for years. The old OGs and the whales who got in at much lower prices years ago, they're the ones that benefited from the big run up, not the people who have been buying it recently. But also, I think a lot of the institutional money that didn't even buy Bitcoin, one of the reasons they didn't get into the gold market was because they were hearing all this hype about how Bitcoin is going to replace gold. It's the new gold. And they probably thought, well, why should I buy gold? I mean, it's going to be replaced by Bitcoin. So even if they weren't buying Bitcoin, all of the Bitcoin hype may have discouraged them from buying gold. But gold is going to emerge as the winner. You know, it's slow and steady wins the race, right? The tortoise versus the hare. Gold is going to emerge triumphant from 2025 with this huge performance as you know, the air is coming out of the Bitcoin and the crypto bubble. I really think that there's only one hope that Bitcoiners have to stop this implosion, and that's a government bailout, a U.S. government bailout of Bitcoin. Now, of course, they wouldn't frame it that way. What they might do is Trump might come out and say, because of this big drop in Bitcoin, we're going to buy the dip. We're going to use this opportunity to fill up the strategic Bitcoin reserve, right? If the Bitcoin, lobby that bought and paid for the Trump campaign, if they can convince Donald Trump to buy this dip on behalf of taxpayers, right, which he's really just screwing the taxpayers over. But if the U.S. government, goes into the market and doesn't just buy Bitcoin, but indicates that it's going to buy a lot more, right, to get people excited about front running the trade, absent that, I just think it's a one-way ticket down, and that's going to be great for gold. Of course, if the government has to bail out Bitcoin by using this strategic Bitcoin reserve, that proves that the whole concept is nonsense. Because if Bitcoin needs a bailout, then clearly it's not a reserve asset, right? If the government has to come to the rescue of Bitcoin, then how is Bitcoin going to rescue the government? Because that's the whole point of having all this Bitcoin. It's supposed to save us. We're supposed to make all this money on this Bitcoin. But if we have to prop it up and prevent it from collapsing, it reveals the truth. So it's going to be pretty hard to try to put lipstick on this pig and spin it as a good move for America to have a reserve of Bitcoin. But again, that's the only thing that I can see, because, you know, a lot of the Bitcoiners think, look, this is no big deal. You know, Bitcoin always drops and it always comes back, right? So we don't have to worry. We'll just hodl, right? We'll hold on for dear life. We'll ride it out, and it's going to make a new high, just like it always does. And of course, people have been conditioned to believe that, right? And it's going to work until it doesn't. And I know you're not supposed to say this time it's different, but this time it is different, I think. I think the leverage is much bigger than we've had in the past. We didn't have all these ETFs that I think you're going to see unloading. We didn't have them in prior cycles. In fact, they helped revive the market after the last downturn, all these Bitcoin ETFs that came on the scene and started buying up Bitcoin. And we also have all the Bitcoin treasury companies that we didn't have before that I think are going to become sellers of Bitcoin. So you have the treasury companies that are going to have to unload, the ETFs that are going to have massive reductions. You're going to have the margin liquidation from people who pledge their Bitcoin as collateral and then borrowed against it to buy stuff or pay their bills. They're going to be liquidated. And of course, what you have now that you haven't had in the past is this huge bull market in gold, right? If gold is performing this well, if you've got a 50% gain in gold, who the hell needs fool's gold? I mean, why would you have to give up real gold that's doing so well to take a chance on fool's gold, right? Before, the Bitcoiners were able to promote Bitcoin because gold wasn't going anywhere. But now gold is. Remember, they were saying Bitcoin is going to be the fastest horse in the race for the dollar debasement trade, for an inflation hedge. Well, it's getting killed. People in Bitcoin need a hedge, right? It's de-Bitcoinization, not just de-dollarization. People are getting out of that. And people are also getting out of tech. So I think everything is going right for the precious metals trade because all of the problems that it really was plagued by in the past are going away. And I think it's clear sailing. I think the central banks that have been buying gold all year are going to buy more next year. And a lot of central banks that haven't been buying gold, they're going to start because they can see how successful it's been with all the other central banks. You know, the Bitcoiners were saying that all the central banks were going to have to race to buy Bitcoin, right? That was going to be a Bitcoin arms race started by the U.S., but everyone was going to FOMO in to Bitcoin. It's not Bitcoin, it's gold, right? The central banks that have been buying gold are the winners. And in fact, now this year, the percentage of central bank reserves that are in gold is now higher than U.S. Treasuries. And this is the first time that's been the case in a couple of decades. And so the central banks that already made the decision to buy gold, right, they're doing great. And I think that's going to result in bigger buys of gold by those banks. But now other central banks that weren't buying gold realize that they need to buy it because they're getting left out. The FOMO is not about Bitcoin. It's about buying gold. And so you're going to see that, but you're also going to see private investor demand, I think, in 2026, like we've never seen, because people are going to look back at 2025 in early 2026 at the spectacular returns in gold relative to equities, relative to crypto, right, relative to everything. And people are going to get invested. And again, Morgan Stanley came out and said we need to adjust the 60-40 portfolio. We're going to cut the bond allocation in half and replace it with gold, which again shows they don't view gold as risky. Otherwise, they would have reduced their equity allocation. They reduced their bond allocation. They said sell half your treasuries. That's where the risk is. Get out of half your treasuries and put the money into gold. So this is a big deal. This is a game changer for the precious metal when it's finally being rightly understood for what it is. It is the real safe haven. In the past, when people were worried, they bought treasuries. Now they're going to buy gold because the real risk is inflation and dollar debasement. And you have no shelter from those risks in U.S. treasuries. In fact, you're at the center of the blast. That is the worst place you can be. If you are afraid of inflation, if you are afraid of the dollar going down, you can't take refuge in treasuries because all treasuries are IOUs for dollars, but in the distant future. And so if the dollar is losing value now, the one thing that's worse than having a dollar today is getting paid a dollar in 10 years or 30 years. So how do you hedge that? You buy gold. And that's what more and more people are going to be doing. So you're going to have a lot more competition in 2026 for the central banks. See, this year and last year, the central banks didn't have to compete with private investors. In fact, private investors were selling. Americans were foolish enough all last year and most of this year, they were selling their gold to the central banks and they were happy to buy it. But next year, I don't think you're going to see net selling. You're going to see net buying from private investors, both institutional and retail. So now instead of buying from the public, the central banks are going to be competing with the public to buy gold. Well, where's all this gold going to come from? We don't really mine that much of it. So it's going to come from a higher price. The only way everyone's going to get filled on their gold is if everybody pays a much higher price, which is why I'm continuing to urge our clients at Schiff Gold to get ahead of the curve, keep buying, and don't worry that $4,000 gold or $50 silver seems expensive. It only looks expensive compared to where we were, but compared to where we're going, it's going to look real cheap. So you want to buy it again. I'd buy over the weekend again. This is another time I'm going to pound the table and say, don't wait till Monday. Buy more gold at Schiff Gold this weekend and buy silver. It's right back below $50. There's not going to be that much longer where you can buy silver below $50. And you may never be able to buy gold below $4,000. But right now, it's below 4,100, so it's pretty damn close to the floor if that's 4,000. And again, if you haven't already opened your T-Gold account, get started. Get started over the weekend. That's a great opportunity to buy some more gold and silver. Go to tgold.com today, right? And right now, T-Gold is not really its own website yet. It will be. It's part of the Schiff Gold website. I am building out this ecosystem. But the first step is to get everybody's T-Gold account established. And you can establish it in a few minutes. You can fund it. There's going to be more easier funding mechanisms introduced. The reason I'm bringing it out now and not waiting until everything is set is because maybe that takes me another year or two by the time I get it all completed. But, who knows how much more expensive gold and silver are going to be by then. I don't want people to wait. I want to get people in right now because the last thing we want to do is spend our gold. We just want to accumulate it. We just want to save it. And you can easily do that at T-Gold. Now, if something comes up and you need the money, you could sell. You buy it from us just over spot, tiny markups, and no storage fees. So you're getting in about as cheap as you can to gold and silver. But ultimately, this is going to be the building blocks. I am going to turn this into a payment platform, kind of like a PayPal of gold, where gold is going to be something that you could use as a medium of exchange. You can earn gold. You can spend gold. You can send gold. You can gift gold. All that's going to happen. I'm going to get debit cards. I'm going to get credit cards, secured cards by gold, debit cards where you can tap into your gold, right? Now, you don't actually need that yet. You're going to need it when the dollar is collapsing and people don't want to transact in it anymore. So I'm preparing for that right now. And eventually, I'm going to do a token. So not only will you be able to go to tgold.com and get your physical gold. If you want it, you can withdraw it and we'll send it to you. But you can also withdraw your gold in the form of a token, which basically means you own the gold and the token is evidence of that ownership. It's like a warehouse receipt from the blacksmith, except it's on a blockchain and it's a token. But now you can use that token. You can send it to somebody else. And when you do, you're sending them ownership of your gold. And of course, it's divisible. So if you have, $10,000 worth of gold and you want to send somebody $100 worth of it, right? You don't send them all of your tokens. You just send them whatever you need to equal $100. And now that gold is no longer owned by you because you've passed on the token to somebody else who can now take that token back to Schiff Gold and redeem it for physical gold. Of course, there's going to have to be a KYC process when they go to redeem it. But as long as it's circulating, that's up to the exchanges or others to perform the KYC. We do it when you buy the gold and then when somebody redeems the gold. And of course, if it's on our platform, every time it goes from one person to another, we've already vetted everybody. But if you withdraw it in the form of a token and you take it to somebody else's platform, well, then they're the ones that have to do the vetting. But this is going to be a great system. This is what I'm going to be debating. It's not really a debate, I guess. There's no moderator. We're going to have a one-on-one conversation in Dubai in early December. So in a couple of weeks, I will be discussing tokenized gold versus Bitcoin with CZ, right? The owner of Binance. So this is going to be a high-profile debate discussion. It will be simulcast online. But I think that tokenized gold is everything that Bitcoin promises but can't deliver. And now you're seeing the rejection of Bitcoin in the market. Yes, people are going to laugh it off. They're just going to assume that it's just going to recover because it's always recovered. And they don't understand that the party is over. The only reason that it had, one last hurrah was because of Trump. I think everything was falling apart. They got Wall Street in it. And then that was starting to collapse. And they got Trump and the Trump administration and they pumped it up. And the Trump family got all involved. But now the whole thing is imploding. And without a government bailout, I think that's it, right? Everything good that could happen has happened. And this has really now paved the way for the next leg in the bull market. And again, the gold mining stocks too are super, super cheap. So if you're just a customer of mine at Schiff Gold, but you haven't bought any of my mutual funds, you got to get into the Euro Pacific Gold Fund. EPGIX is the no-load symbol. You can go to Europac.com is the website. You can get the prospectus. You can read about it. But I think that gold stocks are super cheap. And, I think a lot of the people that were in the crypto-related stocks, they may end up going into gold stocks. If they're looking for the 10-bagger, the 20-bagger, I think that's where they're going to find it, right? If you want to go to the moon, gold mining stocks might take you there. Bitcoin is coming crashing down to earth. The key is, will people bail out of Bitcoin before there's nothing left to bail out of, right? If you want to, you got to have some money that you could salvage. Even if you have to sell it at a loss, better than taking a bigger loss later on. And then you can make your money back in the gold mining stocks, right? You don't have to make it back in Bitcoin because you probably won't, but you can make it back someplace else. And in fact, if you are listening to this podcast and you have Bitcoin, when you go to Schiff Gold, you could check out, and using BitPay, you can actually buy your gold and use Bitcoin. You kill two birds with one stone. You get out of Bitcoin, which is dropping like a stone, and you get into gold, right? You dump fool's gold, you buy real gold, all in the same transaction. So it's a twofer. So make sure and do that. And in fact, you could end up going into T-Gold if you don't want to take physical delivery and have to hold on to it. You could just sell your Bitcoin and fund your T-Gold account. Anyway, that's it for today's podcast. Remember, if you're not currently a subscriber to the Schiff Gold YouTube channel, subscribe, like it, leave me a comment. Also, if you haven't watched my video from Wednesday on my main YouTube channel, Peter Schiff, go over there, check that out. I almost forgot the jobs report. We did get a jobs report. I totally forgot about that on my main podcast because they had canceled when they were going to release October. But we got the September jobs report that came out yesterday, not today, yesterday. But, I think the whole thing is all BS because it's just going to be revised. But apparently there were 50,000 or 119,000 jobs created. There were 4,000 lost, or minus 4,000 in the prior month. But we gained apparently 119,000. I don't believe it. We'll see what happens in future revisions. But the unemployment rate rose to 4.4%. So that's headed in the wrong direction. And the weakening in the labor market is going to be a positive for gold. We get the FOMC meeting also in December. There's a risk that the Fed won't cut. I think they will cut. It's a mistake. They should hike. But all that is going to be a positive for gold, and you want to front run that. You want to be in gold before the Fed makes a move, not after. Again, that's it for this podcast. Enjoy your weekend, everybody, and tune in again a week from today for another Schiff Gold Friday market wrap.